All right, guys, I hope you're doing well. I just wanted to share a trade idea with you guys following last week. Last week, we hit a lot of resistance zones, key levels where we saw the bears kind of take a shot at a rollover, and a lot of the markets saw these kind of plummets off of these resistance levels. We saw it in Aussie CAD, Aussie dollar, pound dollar, euro dollar. We saw it in New Zealand dollar and many others. And now we are seeing the same thing in the euro dollar. Well, why do I want to talk about that? Well, as you can see, we've been pushing up on the euro dollar until we hit this resistance zone up here at 1.09, and then we saw this rollover. And where we've come down into is previous structure resistance, which was also a retest. Okay, so immediately we're seeing this nice little zone here as a potential area for where the market's likely to start running out of steam and then continue with this bullish directional move. Not only that, if you guys are familiar with trend lines and things like that, you might use trend lines to determine where you're getting in, where you're getting, where you're looking for that deceleration. But ultimately, resistance becomes support much of the time. So not another key indicator is the amount of bearish candles we've had. This is a daily chart, right? So the last week, basically, we've had a big rollover of bearish candles. We know that doesn't go on forever. So when we're looking for trading opportunities on this, we can start drilling down and seeing where's the best opportunity where the market's likely to react and price is likely to show us a sign that it's run out of steam now. Now we're going to continue with the prevailing trend. And one of the ways you can do that is look for a retest, a double bottom in that zone. Now I'm going to go straight down to the 60, and you can see here that we are putting in a nice double bottom that hasn't pulled back deeply into structure or anything like that. So we've got a nice time and price symmetry double bottom. It's not too much time symmetry, but price symmetry is there. And we're currently retesting the initial low. If we look at the initial low on RSI, you can see the initial low, we went to an oversold condition. We're seeing some bit bullish divergence on the RSI right now, and we've got equal tests of price. Now, we have spiked down a little bit, but if we're looking at getting targets in on this, let's just bring on our long tool. Let's just say that the market closes, because we're going to close in 3 minutes. And we can look to place this order or not. And it's important we wait the 3 minutes, because if we close below this previous low, then it's not a valid double bottom. Okay, so let's just say in 3 minutes time we do close there. What I want to do is get my target so I don't have to fight against any of this inside structure in here, right? Any of this choppiness. I want to get just below that so that I can get a high probability of getting a fill. And then my stop loss is just going to go an ATR below this low. Okay, so you're talking about probably a 2.4, 2.5 to 1, something like that. Still a good trade nonetheless. And now we just wait. We wait a couple of minutes for the close of the candle. And if we can get in, we can place an at market order. Or if we break and close below this previous low, then we can't. So that's the difference and that's the kind of separator between traders who take high probability setups and traders that just take any setup and hope for the best. So the dogs are going crazy for this trade. They want this trade to play out. So what I'm going to do is I'm going to wait another, what have we got? 60 seconds or so, not even that. 45 seconds. In 45 seconds, we're going to place this trade if it's valid. And I'm going to show you exactly where we're getting in, where we're getting out, and then hopefully we can make some money. And I'll let the trade play out as that plays out. So we've got 26 seconds, 25, 24. So now I'm just going to get the trading panel on, create new order. This is going to be a buy at market order. Okay. And we're going to buy this at whatever this market is trading at the time when we complete. Got about 3 seconds left, and we're going to hit buy. There you go. We're now in. Okay, so we didn't get the level that we would have hoped, A little bit lower would have been nice, but now we can go in and get our stop loss in and our target in. So 0686 for the stop loss. So 0686. And we're going to go up here for our target at 0768. So 07, take profit 0768. And that's it. We're now in. We've got about a 2-to-1, just under a 2-to-1 reward to risk now. But still a nice little setup, and hopefully we can hit some targets and make some money. So I'll come back to you when this is played out. Either way, stopped out or hit targets. So I'll catch you then. All right, so just to update you on this trade, and there's a real valuable lesson here. It's because you can see that following the getting into the trade, you can see that the move actually played out, right? But here's where it doesn't quite always go to your favor, but what you can do in order to optimize your system, right? So you can see that we just didn't give our stop loss enough breathing room here before the market just tipped us out and then rallied in the opposite direction. Came within a couple of pips of our target, depending on if you front run orders, you would have got pushed into that or not, right? But the move did play out, right? So you should get excited about the fact that we can predict these moves, okay? And now it's just a case of optimizing that. Now, I was a little bit aggressive with stops and targets on this particular demonstration. However, the reason for that was I always say I don't want to be greedy. Okay, I don't want to be greedy for target taking, and I don't want to fight through structure. Okay, and I was looking at, based on the 4-hour time frame, I placed my stops based on the entry time frame, which on this case was the 60, and my targets go in based on the trading time frame, the higher time frame, and that was the 4-hour. And I didn't want to push past this structure here. Okay, so I set the price at a level just below the previous close here, and we didn't hit the target. However, if I had gone down to the hourly and I said, right, okay, well, what can I learn from this? Well, maybe look at this inside structure support level. Maybe if I just went a couple of pips below that, or 3 or 4, 5 pips below that, right, whatever you want to put as your new rule to go and test and tweak, then I would have hit it. Okay, and then it's down to stop loss. Okay, well, what can I learn from the stop loss? Maybe I give it a little bit more breathing room, get a 1.5 to 1, 1.3 to 1, and you kind of start having these ideas that then you can go and test so that you optimize and get better and better at your trading system. So this one, in this case, was a loser, and there are going to be losers, but it's what you can glean from it and get better at going forward, and that's really all that matters. So drop a comment in and let us know what you do to optimize and how what you've picked up from this video. Let me know what you think of these videos, and I'll see you in the next one. Take care.